G'day everyone, welcome back to Pete Investing. Today is June 23rd, 2023. This is the the Australian New Zealand currency update. Got the bullish momentum on our weekly, a bearish movement on our daily, and also a bearish movement on our hourly. Although we do have a bullish momentum or bullish divergence on the CCI versus a bearish divergence on the price chart. And we'll see if this is going to do anything in the coming days or hours. So first looking at the weekly chart, our triple moving average of the price chart is long, likewise the CCI 150 moving averages, and our new introduction to this multiple moving average oscillator is approaching the zero line, and that's also bullish in an upswing. So again, the weekly is long. On the daily, however, it's breaking down on all the charts. The price chart's down, the CCI is starting to break down, and the oscillator is also starting to turn down. So a bearish outlook on the daily. So again, we only trade when the weekly and the daily are aligned on the smaller time frames. However, on the hourly, we've got this bullish divergence on the CCI versus a bearish divergence on the price chart. Now you'll notice when we've got it's not making new lows like it is on the price chart. It's making new highs or new higher lows, I should say, on the CCI versus lower lows on the price chart. That's giving us a bullish divergence. Now, there's a couple of things happening here. We're comparing those 2 points there on both the CCI and the price chart. However, we've also got this secondary, if you like, divergence between that area there. I won't draw another line, but between that point there to there, which coincides with that point there to there. So in the very shorter term on the hourly time frame, what you can do is trade that little range there. So this is one little bullish divergence you can trade on that little range there. So what we would do there is look at the Fibonacci range. Let's go back to this. Let's draw that again. Go back to this recent high. So zooming in there, as soon as it breaks above that, your initial Fibonacci range, you don't want to count this one, it's right on the border, so we want to count that as your initial target range. So let's put that in there between the 38% and the 50% for that little range there. In terms of this big one, if this is to work, first of all, for these to fail, we need to see the price continue to collapse to the downside, and we also need to see for this one, for the smaller one, we need to see the CCI break below this area. So that'll be when it invalidates the bullish divergence. For this bigger time frame, we need to see the price collapse, and we also need to see the CCI break below that level. Okay. Now, for this to work, we need to see the CCI continue moving up, and we also need to see the price break up higher as well. And that'll mean we need to see then that range, bring it up to that highest candle in that range. Let me just delete the Fibonacci on that one. I'll keep that in there for the time being. But basically, zooming out, you need to see the price break above that point before seeing any higher highs. Let me just. So again, you'd have to probably take it to the higher level Fibonacci. Let's go from that point up to that point, and you'd have a target area up there somewhere. That's a long shot. That'll be your target area for that longer time frame. Okay, that's if you expect this to work. But anyway, we've got two divergences. We've got this longer time period and this smaller time period. Okay, so anyway, that's just basically trading the divergence. I prefer to trade when the weekly, daily, and the hourly are aligned. In this case, they're not aligned. The weekly is bullish, the daily is bearish. So we wouldn't be taking any trades using that method on the hourly as well. So hopefully that's helped with some divergence ideas and possible trading strategies. To understand more, subscribe to my Patreon page, where we also scan for weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.